The thing is that if you have a new business and you're looking for a low doc business loan, no personal guarantee, sometimes it can be really complicated because the lender is looking at your ass and thinking, too much risk. It's very high risk. You have a new business and they're asking for a low doc. That's kind of crazy. So they don't want your ass to be like, they don't want to approve you in the first place. But there are approval hacks that I want to share with you into this conversation so that you can actually be approved no matter what. Okay. So here are the steps I really want you to pay attention to. So if you're looking for a new business low doc business loan, you want to pay attention. You want to think about your eligibility. So everything starts with your eligibility. Like you can just maybe sit around and tell me, hey, listen, I want a low doc new business loan. But the question is, do you qualify in the first place? Because some lenders might say, you know what, I don't fund this industry. I'm not going to fund this industry. For example, I don't fund crypto, or I don't fund, like, let's say, cosmetics, or I don't fund whatever it is. Make sure that your business, your sector, your niche is in line with what the lender is asking you to provide. Okay. Otherwise, you're never going to qualify in the first place. So when people say, well, having a low doc business loan for a startup is kind of complicated, that's because they haven't done the research. You gotta do the research, and you gotta ask yourself, is the lender comfortable with? And see, most lenders, they like to do things locally. So geography plays an important role. So if you are, let's say you are in Georgia, or you are in Delaware, or you are in North Carolina, you are in Oregon, you are whatever you are, make sure that you first go with those local lenders, because lenders will like to see, okay, here is a player, here is a company that here's a new business and they want a loan from us. Okay, no problem. They are local. Okay, so we have a clear idea about what kind of business they want to pursue. So this is important. Okay, boss, welcome back to the show. It's really a pleasure to have you here, and we love to have this convos every now and then. And into this conversation, I want to really walk you through all the tips and tricks. I want to give you the hacks that you need to pay attention to if you want to get your new business low doc business loan approved real fast. Okay, so number one, you want to determine your eligibility. So even if you think that you might be eligible based on your industry, always ask. You want to ask the lender. So the thing is, what you want to do is you want to look for lenders in your area, and you want to give them a call. Give them a call, pick up the phone and ask them, do you fund my business? If they say yes, then you know that, okay, this is the first step in you being eligible. The second thing I want you to do here is to write a business plan. See, son, daughter, and mom, dad, granddad, grandma, everybody. When you hear the words low doc, a lot of folks are trying to tell you, hey, listen, you are not providing any kind of documentation. But that's not true. Low doc just means that you're not actually offering the lender a gazillions of paperwork. No, it means you're just providing maybe 2 or 3 types of paperwork. Don't anybody tell you that you can ever get a business loan. I don't care if you're an established business or you are a new business. Don't believe anybody who is telling you can get a loan with the zero documentation. Zero documentation. They are lying to your face. Okay? They are trying to confuse the hell out of you. There is like, now when we talk about no documentation, that means that you're going to have to connect your bank account to the lender's system, or you're going to have to connect your accounting software to the lender's system. So there is some kind of documentation, yeah. But just saying that, listen, I'm just going to sit around and they're just going to give me money for free. That ain't happening, boss. That ain't happening. So which means what? Think about writing a business plan. And when I'm talking about writing a business plan, I'm not asking you to write me like the best English language ever, whatever. No, I don't care about that. The lender doesn't care about that. As a matter of fact, if you're not even if you have no neck for writing financial literature, you might have to outsource the whole thing. You might have to ask a cousin, or you might have to ask your uncle Joe, or your aunt, Alma, to kind of help you out. Or you can just go online and go on sites such as Fiverr. You can go on freelancer.com or Upwork and find someone to run a business plan for you. Okay, this is important. By the way, boss, I want to quickly remind you to this topic. I'm talking to you about new business, low doc business loan, no personal guarantee. I'm giving you here the approval hacks, the approval hacks that you need to pay attention to. Okay, so bottom line here is you need to have a comprehensive business plan that shows the lender that, hey, you understand the business you're in the first place. You got to understand the business you're in. I mean, if you are asking me to finance your business, but I see that you yourself, you have no idea what you're talking about. Do you really think I'm going to finance you? Come on, boss, think about that. I'm not going to finance you. I ain't no fool. I really want to make sure that you know exactly what you're doing. The third thing I want you to do here is if you have a new business and you are looking for a low doc business loan, no personal guarantee, you got to choose the right type of loan for your startup. Okay. The thing here is that you have a constellation of loans. You have different types of loans depending on your geography, depending on the state and city you're applying from, depending on the county you're at, depending on the niche you're in. A lot of things happen, like depending on the regulations that you are actually restricted to. Like if you're doing hazmat, for example, if you're doing something that's regulated at the federal level or the state level, the conditions are different. You have different types of loans. Okay, so and I'm not even talking about no doc or low doc or full doc, whatever. No, I'm talking about the loan itself for your startup. So you have to choose the right type of loan for your business. So I mean, we all know in this economy things are changing right now. And as a matter of fact, the Wall Street Journal and also the Harvard Business Review were saying the last time that a lot of startups are failing because they don't have funding within the first 6 months, 6 to 9 months. That's like an article from the Wall Street Journal. Okay, so it's legit. It means that they have done research and they realize that a lot of startups are not failing because they're not actually they're not able to understand the needs of their business, of their market. They're just failing because they have no money to actually implement that vision in the first place. So you got to choose the right type of loan for your startup. So are you looking for a business line of credit? Are you looking for a term loan? Are you looking for let's say a working capital loan? Are you looking for are you looking for let's say an equipment financing arrangement? Are you looking for an MCA? There's something called merchant cash advance. There's something called also invoice financing arrangement. There's something called invoice factoring arrangement. So the point I'm trying to make here is what I'm trying to tell you is that there is a constellation, there is a variety, there is a hodgepodge of business loans that your startup could qualify for. Okay, and it's up to you to choose the right type of loan so you have a clear idea what the terms and conditions are, and nobody can come and try to razzle dazzle you and say, listen, you want to get this loan, you want to get that loan, and I'm going to charge you 30% or 50%. No, boss. You have to do research. You have to make sure that you are clear about the loan that you really need for your startup. The next thing I want you to do here is to actually vet different lenders. See, the thing is, when you're looking for a low doc business loan, right off the bat, you're not going to talk to banks and the credit unions. Mm-mm. They don't want your ass. Mm-mm. If you want low doc, you are basically losing those two categories right off the bat. Right off the bat, don't even think about it. They're not like no bank is going to give you money, lend you money without you providing some kind of extensive documentation. It's just in their DNA. They love documentation. They love docs. So, son, daughter, grandpa, grandma, mom, dad, if you're listening to me and you have a new business and you want a low doc business loan, you want to look for those alternative lenders. You want to look for those online lenders. Those are more amenable to you. They'll work with you, okay? And so you sometimes you can also have micro lenders. You have the Kiva of the world. You have the Action of the world. Those are two. They're not really that many of them, but you also have the peer-to-peer, the crowdfunding platforms. Okay. By the way, boss, let me quickly remind you of today's topic. I'm actually talking to you about new business, low doc business loan, no personal guarantee. I'm sharing with you a few hacks to kind of help you get the loan that you need real fast. Okay. And when I talk about actually vetting different lenders, I'm talking about you actually seeing your situation and actually contacting online lenders, and most importantly, alternative lenders. And when I talk about alternative lenders, there are so many of them. I mean, you have Can Capital, you have Biz to Credit, you have Toro Capital, you have Kalamata Group, you have, there are so many of them. Like you have hundreds of them, and we deal with them every single day. In our business, we actually have clients and we deal with those business lenders. The point I'm trying to make here is that when you vet different lenders, you need to have pointers, you need to have criteria by which you can vet them, right? You have to look at, for example, the loan that they actually will grant you, the loan amount, the terms and conditions, the repayment strategy that they want you to have. Or they actually do they want you to repay them like every week, every day, every yeah. Whew. There are lenders who want you to pay them every day. Do they want you to pay them every month, every fortnight, like every 2 weeks, or every quarter? It really depends. You also got to look at how much you're charging in terms of APR, right? You also got to look at the kind of documentation they ask you, because some lenders might ask you one or two documents, while others might ask three or four. So you got to really vet them. And the next thing I want you to do here is to submit your application. Now, when we talk about submitting your application, there are several ways of doing that. Normally, if you want to submit a new business low doc business loan, no personal guarantee, most of the application is submitted online. And because, see, those online lenders, those alternative lenders, they don't have like a brick and mortar branch where you can just walk in and just talk to a loan rep and then fill out the application right then and there. They don't have that sort of local or retail foundation, nor do they want to have it in the first place, because they're able to be that cheap in terms of their services, in terms of their APRs, because they don't have the same cost base that banks and credit unions have. Okay. And what I want to say here is that when you have to submit your application, you got to ask yourself, do they want me to submit my application on a specific page on their website, or do they want me to submit it via like email? Because some lenders will want you to submit your application via email because they're more comfortable with that medium, or while others they will just direct you to a specific page on their website and say, listen, please submit your applications here, and that's it. Okay. The bottom line here is that you got to ask yourself what really works for you. What does are you comfortable working with an online lender who wants you to do things like quickly, or are you more comfortable with a lender who takes their time? The thing is that some lenders will actually, once you actually go on the website first, you will have to do a pre-qualification. So you don't submit your application, you submit your pre-application, so they can see if they can pre-qualify you. So you will see whether or not you can qualify for a loan in the first place, for a low doc loan in the first place for your startup. So you can see how much you can be approved for. And this is a win-win situation for you anyway. It's a win-win. It's a win for the lender, because they are not going to spend money doing a hard pull on somebody who's not interested in getting a loan in the first place. Because anytime they do a hard pull, they're paying money, okay? And it's a win for you also, because then your credit score is not there's no ding in your credit score, and there's no hard pull for that matter. So you're not losing anything, and you can see if it works for both parties before you actually commit, okay? So submitting your application can be, first, submit your pre-qualification application and then your application, or just submitting your application right off the bat. Here's a review I really want you to pay attention to. So when we talk about new business, low doc business loan, no personal guarantee, as I was telling you earlier, there are several types of startup business loans. And it's really important to have a clear idea of what you want, because, again, going back to what I said, in this economy, with banks filing for bankruptcy here and there, from the fact that you might have some trends in your specific sector that are different from other sectors, from the fact that clients are constantly changing, you have shifts in consumer habits. This economy is in constant sort of is constantly changing. You got to make sure that the loan that you get for your startup, that loan is adapted to your specific needs, and also to the specific needs of the market. You can't just get a loan because you think that that loan will help you out. You got to get a loan because the loan will actually show you what to do and how to do it real fast. Okay. The point I'm trying to make here is that when we talk about business loans for a low doc, you can have term loans. So term loans are often granted to a business with sound financial statements. In other words, you have proven to the lender that, hey, listen, you can actually repay the loan. But if you are a startup, you can actually get a term loan also if you have a solid business plan. because a business plan can replace the requirements to have operational longevity. In other words, the lender wants you to actually prove that you have been around, you have a track record, that you have a proven track record. You have proven to the market and to yourself and to the lenders that you know how to run a business. And then so they'll give you a term loan. That's usually what they do. If you are a startup, things can be a little complicated. But then if you have a business plan, you are showing the lender that anyway you have thought about your business and you think that you have the strategy, the right strategy to run it successfully. You can also consider a line of credit. Okay, so a line of credit gives your business flexible access to cash for expenses. So like a credit card, you decide when you withdraw money and the amount, and you also have like a spending limits and only accrue interest on the amount withdrawn. So this is kind of cool in terms of flexibility. Now the only disadvantages associated with business lines of credit include the difficulty of getting approved if let's say your business is less than 3 years old, and the potential to worsen debt. But if you have a business plan, you could qualify for a low doc business line of credit, not a problem. Let's talk about another type of low doc business loan. This is not really like the same thing as your typical business typical business loan from a credit union or a bank. But hey, listen, in this economy, as I just said, things are shifting. Consumer habits are changing. Okay, the economy goes through ups and downs, so you gotta find ways to diversify your funder catalog, your basket of funders. Okay, so think about peer-to-peer lending, for example. I mean, for entrepreneurs who don't want to borrow money from a traditional bank or lender, peer-to-peer lending is a great alternative, with dozens of safe, reputable websites that connect qualified applicants with excited investors. Peer-to-peer lending enables actually business owners to receive loans with rates and terms just like a bank loan. But you want to cut out the financial institution middleman, really. You can also consider new equipment, not new equipment. You can consider equipment loans for your new business, for example. Because when you think about it, for real, equipment loans are a type of financing used to purchase much needed equipment and pay for it across a few years, right? So this option enables small businesses to buy gear they couldn't otherwise afford to pay for outright, because the equipment itself serves as collateral for the loan. Businesses usually don't need to worry about their credit score too much, right? Because I mean, if you're a startup, you worry about your revenue, you worry about your business score as an owner. But if you are buying if you are going through an equipment loan, that's a collateralized loan right off the bat. So again, you are saving your energy here. You can also think about a merchant cash advance. So if your new business is going to start selling, like let's say online, and get some kind of electronic sales, you can actually parlay that record of electronic sales to get yourself an MCA. A merchant cash advance. Okay, so this financing option provides immediate cash taken from the future profit of a business, and so just be careful, because this can be really expensive in the end. But at the end of the day, this is an option that does not really rely on credit score, and it's really quick to set up. You can also try personal loans. I mean, we always say this, like, you can try the personal loan, because I mean, if you want a new business loan with low doc and you don't get it, you've tried everything, you don't get it, you need to shift to a plan B. You need to try another plan, like plan B, and see whatever can work for you. So it's all about having options. It's all about making sure that you have the possibilities to get the funds you need for your business by actually implementing the right strategy. Okay, so this is really important. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about no business, low doc business loan, no personal guarantee. How do you get it? So I give you the steps, and I give you the review that you need to go through to actually get approved real quick. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.